China enabled and encouraged their citizens to start to accumulate gold, but hold it inside of their banking system. So what do they really have access to? Because if anybody thinks that the Chinese government wouldn't take public gold for their benefit, they need to think again. And what they know, what many countries know, since we've seen central banks buy the most gold that they ever have since they started recording it historically, is they're quite clear that this is the end of, whether you're the euro, the yen, or anything else, this is the end of this debt-based system.
In a gradual yet unmistakable process, gold has reasserted itself as a critical asset in the global monetary system. This resurgence has gained momentum in recent years, fueled by the erosion of trust in the dollar, especially after Western countries froze $300 billion in Russian foreign exchange reserves following the Ukrainian invasion. This crisis of confidence has spurred central banks worldwide to bolster their gold holdings. Lynette Zhang, a well-respected banker, stockbroker, and economist, points out that all central banks possess a gold revaluation account. Contrary to the belief that there isn't enough gold to support a currency, Zhang argues that central banks can adjust gold valuations to boost their efforts and restore faith in their currency. Countries comprising the BRICS alliance, Brazil, Russia, India, China, and South Africa, have been particularly active in bolstering their gold reserves. They've added nearly 5,000 tons of gold to their official reserves over the last 15 years. Notably, China and Russia lead the charge, each amassing over 1,500 tons, while India has added roughly 450 tons. Even within the European Union, the allure of gold as a strategic reserve asset has gained traction. Poland, for example, tripled its gold holdings from 102.8 tons in 2000 to 333.7 tons in 2023. This renewed emphasis on gold comes as the price of precious metals has consistently increased by an average of nearly 10% annually since hitting a trough in 1999. Central banks reap numerous benefits from this gold revaluation. Notably, the World Gold Council's data indicates a significant surge in consumer demand for gold in China, with jewelry demand climbing 12% and bar and coin demand soaring 27% in 2023. Lynette Zhang also points out that while China encourages its citizens to accumulate gold, it is typically held within the Chinese banking system. This leads to questions about the accessibility of gold to individuals and the potential for the Chinese government to seize it for their benefit. Join us as we explore the insights shared by Lynette Zhang. Stay updated by subscribing to our channel and activating notifications. Thank you.
All central banks have a gold revaluation account.
Yes.
And the excuse that they use, or that people have heard, is that, well, there's not enough gold to back a currency. Well, that's simply not true. All they have to do is what they always do, which is revalue the gold, suppress it while it supports their efforts so individuals stay away from it. But then when all confidence is lost, then all they have to do is revalue it. So that is the whole point of gold, that there is a finite amount, and it has the broadest base of functionality since it's used in every single sector of the global economy, bar none. And so it actually makes it pretty simple. But talking about China just a little bit more, China enabled and encouraged their citizens to start to accumulate gold, but hold it inside of their banking system. So what do they really have access to? Because if anybody thinks that the Chinese government wouldn't take public gold for their benefit, they need to think again. And what they know, what many countries know, since we've seen central banks buy the most gold that they ever have since they started recording it historically, is they're quite clear that this is the end of, whether you're the euro, the yen, or anything else, this is the end of this debt-based system. But in order to go into the new system, which, if they have their druthers, is a full surveillance CBDC, that is not my druther, but in order to do that, something I've had a really hard time finding, so I don't know that they've fully defined it yet, is in the current system, money's created from debt. What's going to justify creating the new money in the new system? I've seen them discuss debt, which means they got to wipe out through hyperinflation. They're all defaulting. I don't care what country you're looking at. They have no choice. They have to get rid of the debt. And the way that developed nations do that is through hyperinflation. So whoever's holding those debt instruments or, stocks, bonds, things that can only be annuities, things that can only be converted into this, when it loses all purchasing power, look at Zimbabwe. You could be a billionaire and not be able to buy 3 eggs, right? It's hard for people to wrap their brain around because what they like to do is just keep the same name. So a lot of people think nothing has changed when in reality, everything has changed. But at the end of the day, because of its many uses, not only is the broadest functionality, but it has the broadest base of buyer. That's why it's never gone to zero. Look at what's happened since, let's say, September of 2019.
Yeah.
And then if you go back a little further, look at what happened in 2007. So this change is frankly not something that I'm waiting for. It's something that I'm watching evolve. And having studied currencies forever, you see these repeatable patterns. And these patterns tell you where we are in this trend cycle. I mean, I'm never going to get you to the exact day or moment. But, when you see the same thing that has happened, and it's happened over 4,800 times, 100% of the time, and we're doing the same thing, what they always say is this time is different. But the reality is this time is not any different. And so you really have an opportunity in the suppression to buy gold severely undervalued, and silver too. I like silver for barterability and gold for wealth preservation.
Since its low point in 1999, the price of gold has experienced an annual average increase of close to 10%, marking a significant revaluation of the precious metal. This upward trend presents various advantages for central banks. De Nederlandsche Bank President Klaas Knot underscored the potential of gold revaluation accounts, emphasizing their role in shoring up central bank balance sheets. In a November 2022 interview, he stated, "The balance sheet of the Dutch central banks is solid because we also have gold reserves, and the gold revaluation account is more than 20 billion euro, which we may not count as capital, but it is there." On the other hand, Lynette Zhang highlights the broader implications of this gold revaluation for individuals. By investing in sound money like gold, she argues, individuals can protect themselves against currency devaluation and safeguard their freedom, choices, and opportunities, especially during periods of currency reset. The decline in the dollar's value over the years is a prime example of the importance of gold as a store of value. Zhang points out the rising average wages required to maintain a standard of living, a clear indicator of the dollar's diminishing purchasing power. This observation highlights gold's enduring role as a reliable asset that retains value, even as fiat currencies like the dollar falter. Let's get back to the interview.
Well, the dollar is the best-looking horse in the glue factory, maybe. But, really, to your point, since the U.S. dollar is the world reserve currency, which is not really true anymore, but it's still referred to as that, that gives the Fed a lot of power. And because so many countries around the world are tethered to the dollar in one way or another, some countries are even using the dollar instead of their currency because their currency is hyperinflated away and lost all the confidence. What's going to end up happening is those that have chosen to adopt the dollar, including U.S. citizens, are going to be quite shocked as the dollar's demise looms. Now, let me just say this. They know how to do this. They know how to make the transition from one currency to another currency and make it as invisibly as possible. To your point, I was there in 1971 when President Nixon handed over control of inflation to central banks, because that's really what happened when he took us off the gold standard temporarily, which of course we're still off because what do bankers know? They know debt and they know interest rates. And so what tool in a debt-based system, how do you justify or how do you grow the money base? Well, you loan it into existence. And every time the Federal Reserve does that, the money, or any central bank, this is not just the US, but the money that's already out there loses value. That's called inflation. And there are advantages to inflation for governments because they get to tax you without going through legislation. So therefore, keeping it almost invisible. And then for corporations, even though nominally, so numerically, it seems like they're paying you more and more, that dollar out there buys you less and less, so that in 1971, with an average wage of $9,500, a family of four needed one wage earner. Today, you're $150,000 a year, and you're paycheck to paycheck, even at $250,000 a year. And they stimulated anybody under $150,000. So what that really tells you is how much value the dollar has lost. Even look at the stock market with these trillion and $2 trillion and $3 trillion companies. Is it really that company is worth that much money, or is it that the dollar has lost that much value, which is really much more accurate? We can vote with our wallets, right? And have sound money outside of the system. And that presents the opportunity when they do reset the currency. Because right now you have all of these assets that are based on this up at nosebleed valuation levels. And you have gold, because a rise in gold price is an indication of a failing currency. You have that severely undervalued. Well, that's going to flip-flop. So whoever then holds this gold is going to be able to retain their freedom, their choices, and their opportunities. Well, why should it only be the elite? We can do it too and take advantage of what they've set up for us.
How does the ongoing trend of central banks bolstering their gold reserves shape the future landscape of the global monetary system, especially in light of potential currency resets and declining trust in fiat currencies? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.